There is one trading strategy that I use every single day. It's stupid simple, it's incredibly reliable, and it's the reason why I'm able to make consistent profits trading ES futures. So as you can see right here, in the past 2 months trading ES futures, I've made $158,000 and I've won 87% of my trades. So you guys see my results, but the real question is, how can you all do the same? And that is exactly what I'm going to share with you guys in today's video. The goal of this video is to show you guys how you can make consistent profits trading ES futures using a simple institutional strategy within the first 2 hours of market open. What you'll learn in today's video is one strategy that is repeatable and mechanical. The best part is it doesn't require daily bias, fancy indicators, and it happens every single day on ES futures. So what is the strategy? This strategy can be broken down into 3 simple steps. Let's hop on the charts real quick so I can show you. This strategy is based on session liquidity. For this specific video, we are going to look at the London and the New York trading session, specifically the untested highs and lows of these sessions and the 15-minute open of the New York session. I'm also going to teach you the exact timeframes we use when we trade ES futures, the 1-minute, 5-minute, and the 15-minute time frame. And I'm going to show you the different types of entry models that we can use: bounces off lows, projections off highs, and a break and retest of the New York Open. And finally, we are going to take a look at some examples and exactly how to execute the strategy in real time on ES. The most important part about the strategy is liquidity. We can find liquidity by simply looking at the sessions and looking at their untested highs and lows. I have an indicator that allows me to do this. If you guys want to do this super simply, you can install the RP Liquidity Strategy Indicator for free in the description of this video. This will mark out your untested lows, your untested highs, and your sessions. You can turn off and on sessions. It will also show you exactly where the 8 to 8:15 a.m. range is right there. Key thing with this indicator is just to make sure that your time zone right here matches the time zone on your trading view. London session is in blue and New York session is in red. The levels that we are focused on are going to be the untested lows of these sessions, the untested highs, and the 8 a.m. to 8:15 candle of the New York Open. Instead of just focusing on random support and resistance levels or indicators or anything like that, all we are going to do is look for the untested highs and lows of the Asia, London, and New York session on ES futures. The only other level that we are going to mark out is going to be the New York Open from 8 to 8:15 a.m. Eastern Standard Time right here on the 15-minute chart. So if you don't have your indicator, you can pause the video, go ahead and mark out all of your levels just like I do, so you can make sure that your chart looks the same as mine. As traders, we need to find areas where we are finding big reactions on ES because this allows us to make a lot of money and to catch a good risk to reward, meaning finding a setup where we're risking a little bit of money, but we're making a lot of money back. You might be wondering, why is this 8 a.m. candle so important? The 8 a.m. candle is so important because this represents the final hour before the New York stock market opens. This is where all the institutional positioning happens before the cash market opens. In other words, this is where the big banks, the big institutions, the hedge funds are taking their orders on ES. This tells us that this level is going to be important, meaning we want to trade around this level so that we are trading with the big players, not against them. Let's look at an example of a break and retest real quick so I can show you guys exactly how it works. So right here, you all can see that the indicator has already gone ahead and marked out that 8 a.m. candle, meaning we are now just waiting for a break either to the upside or to the downside. It appears that we are breaking to the upside. The important thing here is to wait for 9:30 a.m. Eastern Standard Time because that's when the market starts opening. That's when the volume starts coming in. So now that we broke out, we retested the midpoint, which is where we take our entry right there. The midpoint of this zone is where we are in longs. The reason you all see this little trade graph right here is because I have fully automated my trading strategy. So this is showing the executions that my trading strategy took in real time. If you all are interested in how to do that, I'll talk about that a little bit later in the video, but for now I want to focus on exactly how these setups work. So now that we are in longs, we are looking for a 1 to 4 risk to reward ratio targeting the next key level, which in this case is slightly above the London high from the previous morning. Let's see if this trade plays out, everybody. Looking good, looking good. Boom. We actually hit a full take profit. And I'm sorry, we actually weren't targeting the London high. We were targeting a previous London high from a week back. So we actually got a even better risk to reward than I initially thought on that trade. If we draw out our little trading view graph, you all can see that we risked 10 points to make back 40 points, giving us a risk to reward of 1 to 4. And on that specific trade, I made $4,575. I do want to be completely transparent with you all. I know that you saw that I have an 87% win rate over the last 2 months. My win rate for the year is around 65%. I've been on a nice winning streak. these last few months, but that's not what I focus on. I focus on consistency, so I just don't want to set any unrealistic expectations for anybody watching this video. Yes, I've won 87% of my trades over the last 2 months, but over the last 12 months, I've won 65% of my trades, so just keep that in mind. This is exactly how the break and retest setup is executed. When you're looking at shorts, it's the exact same thing, except when price retests the midpoint, you are taking a short and you are targeting levels to the downside instead of targeting levels to the upside. You'll determine if you take a short or a long by which direction price broke out to at 9:30. So, today it was very clear that price broke out to the upside, but some days, and I'll show you later in the video, we have break and retest to the downside as well. This next setup that we are looking at is actually a great example because this is a break and retest to the downside. So let's see exactly how this plays out. As always, we have our 8 a.m. zone marked out by our indicator. We broke out to the downside. Now we are retesting the midpoint. So we're going to enter some shorts right here, targeting a 1-to-4 risk to reward ratio. Let's see how it plays out, everybody. In our shorts, our stop loss is right above this high, which is beautiful. Shorts are in profit, and this trade, we didn't end up getting the full 1-to-4 risk to reward ratio, which is completely okay. Not every trade goes as planned. The great thing with this trade is that we still got out for a 1-to-1 risk to reward, meaning we still made a lot of money. We still did great, right? A small win is always better than a loss. Now, I know some of you may have seen that next trade because my replay was going a little bit fast, but now we are going to focus on my favorite setup of all time. And the reason it's my favorite setup is just because it's so damn simple and it gives you great risk to rewards. This setup is going to be a rejection off of an untested high. Right here, we can see that we have an untested New York high right there. We also have another untested New York high. When we have two highs that are right next to each other, it acts as a supply zone, right? So think of this as one big zone where price is likely to reject. The reason I say that is because we have a clear invalidation, meaning if price goes above this level, we are wrong. So let's see if we are right or if we are wrong, and let's just see how it plays out. So we're on the 15-minute time frame. We just entered some shorts right there, got our stop right above there, just like I talked about. And as always, we are targeting another key level. We are targeting a New York low on this one from a few days back. So let's see how this plays out, everybody. Boom, right to take profit. That was a beautiful trade. 1-to-4 risk to reward. Let's see exactly how much points we were risking to make back on that trade. So on this specific trade, we actually risked 10 points to make back 50 points because we ended up taking profit right at this low, which was absolutely beautiful. My biggest advice if you're manually trading is to look for a candle closure on the 15-minute that shows that we are rejecting a high, right? So right here, you can come up here and you can pretty clearly see that candles were failing to close above this kind of supply zone, so we ended up rejecting. Now time for setup 3, the final setup, and this is another one of my favorite setups just because it's so damn simple. This setup is called the bounce setup. This setup is so simple, guys, and it's made me so much money, especially the last few months. All we are doing is looking for untested session lows on ES. Right here, you guys can clearly see that we have an untested New York low. We also have an untested Asia low. Just like when we have two highs that are right next to each other, when we have two lows that are right next to each other, that actually means that this whole area is going to act as a zone of demand. And it's very likely that we are going to see some sort of move up as ES touches this zone. Knowing this, I'm going to go ahead and plan to take a long position when the ES price hits this exact level. I don't want you all hyper obsessing over what time frame to use when you're marking out levels. As a rule of thumb, use the 1 hour to mark out untested highs and lows, and then use the 15-minute to mark out that first 15-minute candle from 8 to 8:15 a.m. Eastern Standard Time. When you are entering trades, what I like to do is I like to look at the 15-minute to get a picture of market structure, and then I like to go down to the 5-minute to place my entry, monitor my trade, look at my stop loss, and I'm constantly rotating between the 5-minute, 15-minute, and sometimes the 1 minute if I'm in a scalp and I just want to monitor exactly what price is doing on those lower time frames. So now let's see exactly how this bounce trade is going to play out. We are looking at this untested low right here. Price is approaching it, so we're about to enter longs. Boom, we are in longs. We have our stop loss slightly below this low. Let's see how this goes, guys. And we're going to go ahead and target this next untested high. Let's let this trade play out, see what it wants to give us. Came a little bit close to our stop loss there, but did not wick us out. Still going a little bit slow on this trade. Looking good if we can continue moving up. Boom, right? Just hit the full take profit for a risk to reward of, let's see what it was on that trade. Should be 1-to-4 like all the other ones. 1 to about 4.5 on that trade, guys. So I made myself around $4,800 on that specific trade. I'm going to give you guys a quick lesson on the importance of risk to reward and the unimportance of win rate. You can lose half of your trades, but if you are targeting a 1 to 3 risk to reward on an average of 100 trades, you will still make money. So the higher your risk to reward is, the lower your win rate can be. Personally, I don't like obsessing over every single win or loss, so I'm completely okay with targeting a 1 to 4 risk to reward ratio and having a 60, sometimes even 55% win rate. The problem that most beginners face is they try to have a super high win rate, but they're targeting a super low risk to reward. So even if they are winning a decent amount of their trades, their wins are super small and their losses are the exact same size. So, using simple math, cancels each other out and they don't make any money. I'm going to give you all one more example just so you have a complete idea of how this strategy works. So right here, you can see that we are in some shorts off of an untested London high. We have our stop loss right above this high because if price goes above this, it means we're wrong. Let's see how this plays out, everybody. Price moving up, moving down, looking decent, pretty flat, moving a little bit close to our stop loss. And we are stopped out. Small loss of around 800 bucks on that trade. That's the reality of trading, everybody. Anybody who shows you only wins is lying to you and they are not actually trading. If I make $4,000 every single time I win a trade, and when I lose a trade, I only lose 800 or 1,000 bucks, it is not relevant that I lose trades sometimes. It literally, mathematically, does not matter at all. I have just shown you multiple different trades in multiple different sessions on ES futures, and they were all executed mechanically. That is the beautiful thing about this strategy, is that it doesn't matter what session you are trading, you can still make money if you execute mechanically. Personally, I prefer to trade the strategy during the New York session on ES because that's when I'm up. I live in Florida and that's what makes the most sense with my lifestyle. But I have had people that I know trade the strategy in the Asia session, the London session, and even in the PM session of the New York session on ES futures. And they still make a lot of money. Now, before you go, I need to tell you something that the entire trading industry does not want you to know. And this is absolutely critical for your success as a futures trader. Here's the harsh reality. 95% of retail traders lose money trading futures. But here's what they don't tell you. It's not because trading ES is not profitable. Trading is one of the most profitable skills out there. The problem is that most traders are approaching it completely wrong. See, most traders are trying to predict the ES market. They're trying to use 20 different indicators, drawing random trend lines, trying to guess market direction based on news, economic reports, or how they're feeling about the market that day. And here's what happens. They get into a trade on ES, it goes against them, they panic, they move their stops, they revenge trade, they overtrade, and before they know it, their account is completely blown. If you don't know what your account blown means, it means that your account has gone to zero. But successful traders, we don't predict the market. We react to the market. We don't guess where ES price is going. We know exactly where institutions are going to defend the levels and we trade with them, not against them. And that's exactly why the strategy I showed you today works so well on ES. It's not complicated, it's not fancy, it doesn't require you to have 13 monitors and 40 indicators running on the same time on TradingView. All we're doing is identifying where the smart money has already told us they're interested, the session highs and lows, the 8 a.m. zone. These are not random levels. These are institutional levels where billions of dollars have already been defended. When you understand that the ES market is controlled by institutions, the banks, the hedge funds, the market makers, and you learn to follow their footprints instead of fighting against them, trading ES futures becomes incredibly simple. And this is why session liquidity is so powerful in ES. Every single day, the Asia session creates a high and a low, the London session creates a high and a low, the New York session creates a high and a low. And every single day, the 8 to 8:15 a.m. New York candle creates our zone. These levels aren't going anywhere. They're not dependent on the mood or the news or what some analyst said on TV. They're mathematical levels where institutional money has been allocated. And here's the beautiful part. Once you understand this concept, you will never look at ES charts the same way. You'll stop trying to predict what it's going to do, and you'll start reacting to what the market is showing you. I've seen traders go from losing money consistently to making consistent profits by switching from trying to predict the markets to following an institutional approach. It's that simple. But here's what most of you will do. You'll watch this video and then you'll think, oh, that's interesting. And then tomorrow, you'll go back to your old way of trading ES. You'll go back to throwing random indicators, drawing random support and resistance lines, and wondering why you consistently lose money. Don't be that trader. The strategy I just showed you works on ES futures because it's based on how the market actually moves, not how we think the market should move. So if you want to join the 5% of traders who actually make money consistently trading ES, you need to start thinking like an institution. You need to start following institutional liquidity on ES, and you need to keep it simple. Now, I know what you're thinking. This strategy is simple, but executing it perfectly every single day takes discipline and focus. What if you could automate this entire strategy? That is exactly why I created a custom trading algorithm that executes this exact session liquidity strategies on ES futures automatically. The algorithm has an automatic built-in risk management protocol to make sure that you are following your funded accounts rules. It will also enter trades for you, set your stop loss for you, and set your take profit. It trades using the exact system and the exact rules that I just showed you. But here's the thing, I only make this algorithm available to a limited number of traders because I want to ensure everyone who gets it receives full support and a proper setup on their account. If you're interested in using our software in your own trading account, you can click the link in the description to put in an application. We will read through the application, and if we think that you are a good fit and we know that we can help you succeed, we will hop on a call with you and help you set this algorithm up in your own personal trading account or funded account. But don't wait. Spots are limited, and once they're gone, the next opportunity will not come around for a while. Click the link below if you want to start trading with our automated technology.